Friends, good day! From this video you will learn how to trade with a delayed delta hedger. This is an interesting and popular topic that my subscribers asked me to talk about. Let's assume that Bitcoin is now at 37k. Let's assume that we have a scenario that Bitcoin won't fall or rise too much. One way is to sell put options. I'm at the Bitcoin futures option board right now and I'm ready to sell the options with a delayed delta hedge. Let's say we have 10 days until expiration. The options are not very expensive. Let's take the put options at strike 35,000 for example. If I sell 10 contracts or 100 contracts, I click on the view chart button and I get the following. In this strategy, we will use a delayed hedge. If the price falls below the price of 35,500, there will be a risk of these options entering the money. Then automatically the delta hedge will be activated, or sooner if the price falls below 36,000. How to arrange this? I will make the number of options smaller. Delta is 0.17. We open the market depth window where we will sell 10 contracts at the market price of 231. Normally I would wait and haggle, but now I just click sell. In the position window, the sale of our put options has appeared, and now our task is to create a delta hedge with a launch at certain price conditions. The first step is to click on the new bot button, and the default choice is delta hedger as the most popular bot. If I need another one, I can select another one with a click of a button. Now I need to add a tool for hedging. This is, of course, Bitcoin futures. And I just drag and drop them from the toolboard. As you can see, the delta hedger has already calculated and filled the field with the current delta. I said before that the delta is 0.17, but since we're selling 10 contracts, the delta is now 1.7. Let's call our robot simply delta-hedger BTCZ. Since we're selling a small number of contracts, we will work with small values. The minimum delta is -1, the maximum delta is +1, but you can set any delta, of course. Minimum shares I choose 1, so that the hedger maintains a neutral delta. In this case, the delta can only be positive, so the minimum we choose 0. The maximum we choose 2. This means that we maintain a positive delta between 0 and 2. Or, for the delta to be maximally neutral, we enter 1 everywhere. The minimum shares are also 1, and the maximum shares we choose 5. Timeout is the lifetime of the order, which is important to set. The default is 3 seconds. If the price changes sharply, the delta hedger will place a new order in 3 seconds. In the information window, you can see all the data about the settings and the description of the robot. The line order count is information about all completed orders. You don't need to fill it in. Delta last 25% is the price gap. It is a protection against a sharp and strong price movement. If the gap exceeds 25%, delta hedger will stop. In the indent column, I enter 100 to make it higher. Current delta and current P&L have already been calculated, but the most important thing I want to show you is how to set the price condition. If the Bitcoin price is now 37,000 and we don't want the price to drop below 36,000, we select Start Condition, where we find less than or equal to. And in the start price line, we enter 36,000, and that's it. Thus, the robot will start placing orders if the last price become lower or equal to 36,000. After all the settings of the bot, you need to add it. But as you can see, I can't add the bot because I forgot to put a minus in the minimum delta column. Let me remind you that such a warning can appear if the ratio between the maximum and minimum delta is wrong. The difference between them must be at least twice as much. Otherwise, the bot will enter a cycle. Now the bot is added, we check all the settings again, and if everything is okay, the bot can be started. I press Start, And now the delta hedger is waiting for the price to approach the specified value to start working. Let's try to simulate this situation. I turn off the online mode and enter 36,000 here. Let's say we have 3 contracts sold at 36,000. No. Wait a couple of seconds. I'm gonna try to fix this. I'm gonna go back online. I had 10 contracts sold here. Yeah. Back to offline mode. I changed the price again to 36,000. I hit view chart and yes, it worked. And look, at 36,000, the delta will be close to 0. You can do this operation with selling put options, call options. You can do it with all of them at once, but don't get lost, so that different delta hedgers don't start buying from each other. The danger is that they will go into a cycle and start pulling delta on each other. But if done correctly, a delta hedger will help you limit your risk in case your price scenario doesn't work out. The price goes against you, the options get more expensive, the delta hedge is automatically activated, neutralizing the delta by selling futures. And eventually, the sold put options, along with the sold futures, will turn into synthetic sold call options. And that's all I have for today about the delayed delta hedge with selling options. As always, ask questions in the comments. If this video was useful to you, put a like and subscribe to the channel. I wish you good luck and successful options trading.